After 4 days of drops, oil has finally gained in New York. After a surprise drop in U.S. stockpiles on speculation Europe will recapitalize its banks to tame the debt crisis that threatens to curb the economic growth. Futures rose as much as 3.7%. Crude inventories decreased 3.07 million barrels last week, according to the American Petroleum Institute. An Energy Department report today was forecast to show an increase of 1.5 million barrels, according to the median estimates in Bloomberg's survey of analysts. U.S. stocks rallied after the Financial Times quoted the European Commissioner for Economic Affairs, Olli Rehn, as saying there's an increasing shared view that the region needs a coordinated approach to halt the sovereign debt crisis. Crude for November delivery rose as much as $2.79 to $78.46 a barrel and was at $78.08 at 7:15 a.m. in Singapore time. Futures yesterday slit 2.5% to $75.67, the lowest settlement since September 23, 2010. Oil is down 14% this year. Brent oil for November declined $1.92 or 1.9% to $99.79 a barrel on the London-based ICE Futures Europe Exchange, the lowest close since February 7. The European benchmark contract was at a premium of $24.12 to U.S. futures based on the settlement prices compared with a record of $26.87 on September 6. U.S. gasoline supplies dropped 5 million barrels last week, according to the industry-funded API. The Energy Department report was forecast to show a gain of 1.5 million. The API collects stockpile information on a voluntary basis from operators of refineries, bulk terminals, and pipelines. The government requires that reports be filed with Energy Department for its weekly survey.
Gold futures yesterday fell the most a week as investors sold the metal to cover losses in other markets. Silver slumped to the lowest closing price in almost 8 months. The Standard & Poor's 500 index declined to the threshold of a bear market on concern that a second bailout of Greece will unravel and contagion from Europe's debt woes will threaten banks. The S&P GSCI index of 24 raw materials fell to a 10-month low, led by silver, copper, and lead. Gold has dropped 16% from a record at $1,923.70 an ounce on September the 6th. Because of the general nervousness in the market, there is liquidation across all assets, including gold. William O'Neill, a partner at Logic Advisors in Upper Saddle River, New Jersey, said in a telephone interview. Gold futures for December delivery fell $41.70 or 2.5% to close at $1,616 at 1:40 p.m. in the COMEX on New York, the biggest drop since September 26. The metal, which touched $1,597.60 in electronic trading after the settlement, had gained 14% this year. The S&P 500 fell as much as 2.2%, extending a drop from this year's high to more than 20%. Silver futures for December delivery declined 95.6 cents or 3.1% to $29.83 an ounce on the COMEX, the lowest settlement since February the 7th. On the New York Mercantile Exchange, platinum futures for January delivery fell $48.50 or 3.2% to $1,468.60 an ounce, the lowest closing price since December 30, 2009. Palladium futures for December delivery dropped $29.60 or 5% to $564.15 an ounce, the lowest settlement since September 28, 2010. For Asian opening today, gold for December delivery in New York marked a gain of 0.7% to $1,627 an ounce at 9:13 in Melbourne. Bullion for immediate delivery traded little change at $1,625.95 an ounce. Silver for December delivery rose 0.9% to $30.10 an ounce. And joining us right now is Kun Thipa Nawat Watanasap, CEO of YLG Bullion and Futures. Good afternoon, Kun Thipa.
สวัสดีครับ
ค่ะสวัสดีค่ะ
Kun Thipa ครับ can you tell us about currently gold has been seen a lot of fluctuations with the problems in Europe, and how you suggest their investors to strategize for now?
As the gold price has been fluctuated for a couple of weeks, we recommend customers to be on short-term investment rather than a long-term investment, and to follow the trend investment to buy at the support and to sell at the resistance level. And if the price break below the support level, then they should set a cut loss level also. So this is what we have been advised customer for a couple of weeks.
Okay, do you suspect that there are big manipulators in the gold price to create a volatility to make big buys later?
We don't think so for that. But then, the reason that the gold price has been dropped so much for a couple of weeks, that because of there is a fear for investors for the investment, and then there has been concern gold as a risky asset. So there's been sell-off in gold for a couple of weeks, and they hold in cash instead. And as you can see that all of the stocks and oil price, all the commodities has been dropped off all over the world, including gold. So it's a strategy that most of the investor has been doing for a couple of weeks. That's how the gold price has been dropped. However, in medium term and long term, we still think that gold will come back to play as a safe haven role in the long term.
Kun Thipa, and how about the supply of gold? How are we doing on that?
The supply of gold is still at the consistent level. At each year, it's still at the level of around 4,000 tons. And then from that 4,000 tons, around 2.5 tons it will be from the mine supply, and around 1.6 tons it will come from recycle of gold. So it has been around this level for a couple of years already.
Okay, and how about the situation in Greece and European with the debt crisis that's going on, and Greece is going to miss its target deficit? How is that story affecting the gold price?
For the situation in Europe and also in Greece and also in Italy today, how it will affect the gold price, we have to clarify it into two steps. For the short-term step or short-term effect, we believe that the gold price will have a big drop because right now the gold price has been following the euro price. When the euro is going up, the gold price also going up. But then if there is a crisis or a news that impacts in terms of bad news for Europe zone, then there will be a drop in euro. So the gold price will drop in the short term. However, in the medium term and long term, gold price will come back and play as a safe haven role. So it will come back and the price will come up again in the long term and medium term.
Okay, all right. Thank you very much, Kun Thipa, for your share today with us.